Today, we're talking about how to save thousands in taxes for your LLC before 2025 ends by electing to be taxed as an S corporation, even if you miss the normal deadline. Most LLC owners think you missed your chance to save money this year because you didn't elect the S Corp status by the March 15th deadline. You believe that once the deadline passes, that you're stuck paying taxes on all your profits until next year, or that it's too complicated to do it. But here's the truth that'll save you thousands. You can still elect S Corp status for 2025 even after the deadline passed, and it's easier than you think. It's called a Late S-Corp Election, and it's about to put money back in your pocket before December 31st. By the way, I'm Sauer. I'm a business attorney who's helped thousands of business owners save massive amounts in tax using this exact strategy. And in this video, I'm breaking down how to file a Late S-Corp Election that could save you $5,000, $10,000, or even more this year. Stick around till the end because I'll reveal the one requirement that trips up 90% of people who try this strategy and the simple solution that makes it work before the December 31st deadline. Step 1. Most people think S-Corp elections have to be filed within 75 days of forming your LLC or by March 15th of the tax year. But there's a legal process that lets you file late and still put thousands back in your pocket for the entire year if you act fast enough. Here's how this money-saving strategy works and why timing is everything. Normally, if you want your LLC to be taxed as an S-Corp for 2025, you needed to file Form 2553 by March 15th, 2025. But the IRS allows late elections if you meet certain requirements. The key requirements are simple. Your LLC has been operating consistently as an S-Corp, and you have reasonable cause for late filing, which I'll give you the exact language to use shortly. But here's the critical timing issue most people don't know. The IRS takes a few weeks to process these S-Corp elections, sometimes even longer during busy periods, so I recommend acting fast for 2025. Now, let me show you the exact dollar savings that make this worth it for you. Sarah owns an online business that made, say, $100,000 profit in 2025. Without an S-Corp election, she pays 15.3% self-employment tax on the entire $100,000. That's $15,300. But watch what happens with an S-Corp election. Sarah pays herself a reasonable salary of, say, $40,000 and takes $60,000 as distributions. She only pays self-employment taxes on the $40,000 salary. That's $6,120. Sarah just put $9,180 back in her pocket. That's real money she can reinvest in her business, save for retirement, or use to improve her family's life. Here's what makes this even better. You can file this late election and get these savings for the entire 2025 tax year, even if you file it in November or December. This isn't about bending the rules, it's about using a legitimate IRS procedure to keep more of the money that you've already earned. But here's the thing. Not every LLC should elect S-Corp status, and making the wrong choice can actually cost you money, which brings me to step 2 in my framework for determining if this strategy will save you money. First, the profit test. You generally need at least $40,000 to $50,000 in business profit to make S-Corp election worthwhile. Here's why this number matters. S-Corps require payroll processing, additional tax returns, and more accounting work. These costs typically run anywhere from $2,000 to $4,000 per year. If your tax savings are less than these costs, you're actually losing money, so it's not worth it. Let me show you with real numbers. Mike's LLC made $80,000 in profit. He pays himself a $50,000 reasonable salary and takes $30,000 as distributions. His self-employment tax savings, $4,590. After paying $3,000 in additional S-Corp costs, Mike nets $1,590 in savings. Second, the reasonable salary requirement. As an S-Corp, you must pay yourself what others in your industry and location earn for similar work. You can't game the system by paying yourself $20,000 when similar business owners earn around $80,000. Third, the ownership test. S-Corps can only have individual owners, no LLCs or corporations as owners. One class of ownership and no more than 100 owners. If you plan complex ownership structures, this won't work for you. Fourth, the income test. There's a Social Security tax cap. $160,200 for 2025. If you already earn this much from other jobs, the S-Corp election won't save you Social Security taxes. The S-Corp election is super powerful for the right business, but only if you meet the requirements. And if you do, here's how to actually do the filing correctly. Step 3, filing a late S-Corp election requires specific language and procedures that differ from a regular election. Get this wrong and the IRS may reject your election. Here's the exact step-by-step process that gets your election approved. First, you must include this specific language in the top margin of Form 2553, filed pursuant to Rep Procedure 2013-30. This tells the IRS you're filing a late election under the special procedure. Then complete Form 2553 with all the required information, your LLC's legal name, EIN, address, election effective date, which is usually January 1st, 2025, and management information. Choose calendar year as your tax year unless you have a specific business reason for a different year. In Part 1, Section 1, include a statement explaining why the election is late. Here's language I've used plenty of times in the past that has worked for my clients. The manager or member of the company was under the impression that the company's tax professional was filing the Form 2553 with the IRS for tax year starting January 1st, 2025. When the manager became aware that the tax professional did not file Form 2553 timely, the manager immediately had this form prepared and filed with the IRS. During 2025, the company acted and operated as if Form 2553 had already been filed timely. And here's a critical requirement. All members must sign with actual pen and ink signatures. The IRS requires wet signatures, so no electronic signatures will be accepted. And here's the urgency factor. I recommend sending this by certified mail or fax to get confirmation of receipt. The IRS processing time starts from when they receive it, not when you mail it. Every day counts when you're working against the December 31st deadline. The late election process has specific requirements, but the biggest risk is timing. The IRS doesn't rush the processing just because you're trying to save taxes. So file as early as possible, get it approved before the end of 2025, which brings me to step 4, the challenge that stops most people. S-Corps must pay reasonable compensation through payroll, but you can't go back in time to run payroll for the entire year. This is where 90% of people get stuck, but I'll give you the easy way to solve it. You generally have 2 proven options for handling the payroll requirement, and timing affects which one works best. Option 1, issue yourself a 1099-NEC for reasonable compensation. If your reasonable salary should be $60,000, for example, for 2025, you issue yourself a 1099-NEC for $60,000. The remaining profit flows through as S-Corp distributions with no self-employment tax. The trade-off, you don't get full self-employment tax savings on the salary portion, but you satisfy the reasonable compensation requirement and still save thousands on the distribution portion. Option 2, run catch-up payroll for remaining months. If you get IRS approval in November, for example, set up payroll and pay yourself the annual reasonable salary over the remaining months. Here's an example. $60,000 annual salary starting in November means $30,000 in November and $30,000 in December. Here's the advantage. Full self-employment tax savings and proper payroll treatment. The challenge? You need time to set up payroll systems and process payments before December 31st. Here's the critical timing point that saves your election. You must actually pay yourself the compensation before December 31st. Journal entries don't count. The IRS requires actual cash payments. So here's an example. Jennifer elected late S-Corp status in November. She got IRS approval in mid-December, giving her 2 weeks to set up payroll and make payments. Her reasonable salary was $50,000. She ran $50,000 in payroll for November and December. Total self-employment tax savings, $4,500. So there's my complete money saving system. Understand how the late election puts thousands back in your pocket. Determine if you qualify based on the $40,000 profit rule. File Form 2553 with the exact language that I mentioned before and the procedures that get approved, and handle the payroll requirement using the method that works for your timeline. Remember, this isn't just about saving money this year. Once you elect S-Corp status, you continue saving thousands in self-employment taxes every year going forward. The late election gives you access to these savings retroactively, but only if you act fast enough to beat the processing time in the December 31st deadline. But I also don't want you to rush it. Make sure S-Corp election is right for you, which I explain in more detail in this video here.